We are on episode 16.
1-6, rolling.
Oh, yeah.
Nice.
We could drive now.
Yeah, right. Exactly. That's good. I do have a 16.
I'm sorry.
Right. Don't ask me about car insurance. Let's talk about houses instead.
You want to roll in?
Sure. Okay. Hello, everyone, and welcome to another episode of the Lending Podcast. We are your hosts. That's Jeff Jones.
Oh.
And I'm John Burnham, and we are excited that you're with us again today. We're going to talk about the importance of borrower certainty. What does it mean to be certain that you're going to be able to get approved and buy the house? That's what we're talking about today.
It's a huge deal in the sense of people always ask us, are we sure this is going to close? Is it going to close on time? Are we good? Do you need anything else from me? So I think that, spending a little bit of time together, making sure people hear what options are out there to get additional certainty to make sure that we close on time. Because a lot of times you and I, we are not underwriters. So a lot of people don't realize that the loan officer position is that go-between between like the underwriters that actually go through and approve the loan and then the loan officer to the client.
That's right. Yeah, and I think the most common questions concern, is early in the process. Once they're under contract, our clients are under contract. Hey, is everything okay? Is it going to close? Well, what we're going to talk about today, we're going to really address getting the 100% certainty before you ever write the contract.
Love it.
So there is no, hey, is this going to happen? Like, without a shadow of a doubt. And we've addressed this in some other episodes, right? We've talked about our underwriting approval, sort of the stages of getting approved, the pre-qualification stage, the pre-approval stage, and the TBD underwrite. We call it TBD because there's no property address, so it's a to be determined property. And we're going to call that kind of a pre-contract underwriting. And so that's what we're going to dive into today. And there's a million reasons, quite frankly, why a deal won't close. Like, there's a lot of snakes in the grass out there. We're going to talk about eliminating 99.99% of those before you ever write a contract. And if you're the type of person that wants 100% clarity and certainty, this is for you.
Good. Okay. Love it. Love it. I know a lot of times people get under contract before they go through underwriting. That is really kind of the majority of the scenarios. But there is a growing realization that people want to get underwritten first. And I think that's just smart. And we provide that ability here, and a lot of other lenders do as well. But here at Benchmark, we have a great underwriting process for people that, it's right after pre-approval. And we have that conversation with our borrowers. Again, it comes back to knowing their story and what timeline they're under, what they're looking at. And when we find out, like, if there's a situation that possibly is on the kind of in that gray area of pre-approval of like, you're on the borderline of debt to income ratio, you don't maybe have as much funds as you'd hope to have, or you're relying on seller concessions or something else that could be a pretty big determining factor of getting approved or not when it goes to underwriting, we want to make sure we put you through that process before you go into contract.
Yeah, it's really verifying the information that you've given us as a borrower, right? We have your application, we've looked at credit, we have income, assets, we've gotten the majority of what we believe we're going to need. The underwriting approval, that next step, is the underwriter giving us, here are the final items. Here is the entire story on the borrower side, right? Because we don't have a property yet, so we don't have any of the property conditions like an appraisal or title work, insurance. We don't have those items yet, but we will, right? As soon as we have the clarity and certainty that we know we can close from the underwriter. And so a lot of times there's a disconnect, right, between what our clients believe we need and what they send us and what we actually need. Right. And so this process is really to bring from our underwriting team, bring communication back to you and say, okay, your loan's been approved based on or not, and we'll talk about that in a minute, why it might not be approved. But your loan's been approved and our underwriters reviewed everything. And now, before we go to closing at some point, we're going to need these additional boxes checked off. Right. Sometimes those are super easy boxes to check, and sometimes they're a little more challenging.
Yeah. And I think that, the motions we go through for a pre-approval, we do all this usual stuff. So we're verifying your income with your documents, with your pay stubs. or your tax returns. We're verifying your assets with bank statements or wherever you're getting your cash to close from. We're verifying your credit with either a soft pull or a hard pull, depends on the scenario and the product. And then we run it through what we call an automated underwriting system, so an AUS system. And that gives us really kind of a red or green light, for the file. So that doesn't go through a human underwriter process. That just goes through an automated underwriter process that we can push through. And that's how we do our pre-approvals. But when it goes to this pre-contract underwriting approval process where we don't have an address, so we put the TBD on there, that goes through our team back in corporate, right? And since we, are bank and retail and we do broker, we have in-house underwriters. So we have direct access to our underwriters, which is phenomenal. And then they take a look at the file, and they go through and put and start clearing what we call conditions. So the requirements to get that loan approved, we need verification of, employment. So let's get a VOE. We need verification of mortgage. We need verification of pretty much everything.
Yeah, and I'll give you a quick example of one that just popped up, a snake in the grass that we didn't catch in the early stages, the very early stages of the application because credit scores were great.
Nice.
There were no major derogatories that we knew about. We had income, we had assets, we had all the pieces of a good file. Well, guess what? When we got it into our TBD underwrite before we ever had a contract in place, we found out that the co-borrower had had a foreclosure with an ex he don't own the property anymore, and she kept the property and he moved out, and this was, let's say, I think it was 7 or 8 years ago. And now there were recent mortgage lates within the last 7 years after the foreclosure that had popped up. Now, it was easily addressed. We addressed it through the divorce decree. We addressed it through letters of explanation. We did our own deed research, and we were able to smooth that over. But had we had a very short timeline, had we had zero runway, and we were already under contract, and now we have a borrower who's committed to a closing, signed a legit contract, has earnest money on the line, and we're on our heels, and we don't have the time that it might take to get one of those types of issues resolved. So that's an extreme example. And of course, everything's already smoothed over. We're closing next week. It really wasn't a big deal. But it would have taken a little extra time it did take a little extra time. And so luckily we had that before we were under contract.
I think that's amazing that they went through that pre-underwrite contract first. So I think that's good to know who it's good for, right? So a TBD underwrite or a pre-contract underwriting approval, those are the same thing in our language. They really are good for people that if you want to go quick on your purchase, that means let's get you underwritten so we can close this thing in 15 days or less. So people that want to go quick, I think would be great. For people that have those histories that they don't know how they're going to play out with a mortgage, whether it's, previous relationships in the past, mortgages you're tied to, it's your first time doing this, you're not sure what you're going to qualify for. And then two, if you just want assurances, if you just want to make sure that you're good before you sign a contract for the biggest purchase of your life.
And there's so many of our clients, exactly. So many of our clients come to us and they're planning ahead, and we love that. Hey, my lease is up in 4 months. My agent said I need to start the process now, which thank you out there, agents, for getting your buyers to us quickly, because it's never too early to have the conversation. You're 6 months out, perfect. You're a year out from buying a house, even better, because we can then roadmap for you. And now, obviously, the documentation is going to change. Your job may change. Your income situation may change. That's okay. You will at least understand and have a feel for what have you done to this point, credit-wise, income-wise, and down payment savings-wise that you've done well, what that you need to keep doing, and then what are some things that you may need to stop doing that we can pivot and say, okay, we're going to stop this thing over here. We're going to continue in a different direction. Stop running up your credit cards. We're going to pay those down. Stop with this certain credit account. We're going to close that, and we're going to raise your score. We're going to pay a certain collection off. Like we need time to coach a lot of our clients because they don't really know what to expect when they enter the process. And if we're under contract If you're under contract before you ever talk to a lender, you're really at risk of some of these unknowns coming and just jumping out of the grass and biting you.
Right. I like that. It takes the guesswork out of how things can develop. And I think that people, when you're pre-approved, it's a snapshot. It's like, let's take a picture of this exact timeline right now. As of today, in this scenario that you're in, you're pre-approved. If that scenario changes, the pre-approval will have to adjust.
Correct.
And then we pivot, like you said. And so I think just having that direct line of communication with your lender of like, hey, I'm going to change jobs. Is that going to be a problem with my pre-approval? That's a great peace of mind for a borrower to have. And I think that just goes a long way for getting it done.
It does. And the other piece of the equation is our clients don't always know what to tell us about what's happening in their life behind the scenes. There's a pending marriage. There's a pending divorce. There's a child on the way. There's a job change on the way. There's inheritance coming soon. There's a big expense that we have that we're going to have to cover. My car just was totaled and I need to get a new car. Like, what of that information do we need to know? And the truth of the matter is we need to know all of it, right? Because we're going to kind of find out. So this interview process up front that we go through, our initial client interviews, which sometimes can be, 2 or 3 different 20 or 30-minute conversations, right? Early in the process to really uncover and figure out exactly what's going on with you so we can prepare the file correctly, make notes for the underwriting team. Okay, we know the down payment's coming as a gift from a family member. Let's put that in the file. The down payment's going to be a gift. All our underwriters need to know is the story sometimes. If they just know, okay, there's going to be a gift, I'll mark it as a gift, then they'll put that condition, like you said, they'll condition us for the gift letter or the proof of funds documentation, depending on the loan type. And so the story is so important. And I think that's what we lack in our industry with complete automation. There's no story.
Right.
And the story is the most important part
right.
of making sure that we document correctly and set proper expectations, especially if one of our clients, if you're a ways out from buying a home, expressing to you and explicitly saying, these are the expectations that we're going to have when you come back to want a loan from us. And these are the expectations we're going to set for you as to what you need to do to be ready in 6 or 12 months. And the more clear we are with the coaching and the direction, our clients that take that, they succeed and they'll buy a house.
Right.
Otherwise, you get caught in limbo of you're not quite ready. You didn't get really good guidance. You're doing what you think is best for you to prepare for buying a home, but is it the right steps to take? And you don't know unless you have the right kind of advisor.
Good.
Yep.
Good. I think that, back when I was a kid, I was in Scouts. My son just went into Boy Scouts as of 2 weeks ago.
Oh,
he
cool.
was a Cub Scout for 5 years. But back in my day, the motto was be prepared. They have different mottos now.
Scouts. Really?
Yeah.
Oh, it's evolved. It's the best one.
No, that's not their motto. It's evolved. But the be prepared, it's almost like, as you can tell, we're really big proponents of this process of let's get you underwritten as soon as possible. If you think you're going to go on a contract in a week, let's get you underwritten now. If you think you're going to go on a contract this weekend, let's start the process now. It doesn't matter when it starts. It's just good to have it. Because if you're serious about buying, why not? You're going to go through that process, whether you're under contract or not.
That's right.
And so let's get it done now. Get our assurances. Also, too, people need to realize, when we work with realtors, we want the realtor to also have assurances when they're communicating with that listing agent about an offer. And if we call that listing agent on your behalf with a pre-approval, we're talking you up. But imagine the difference of talking you up and saying, by the way, this borrower is already fully underwritten.
It's huge. It is.
There's no doubt.
Probably the number one thing that a seller and listing agent want is certainty.
Right. Other than the property getting underwritten, we're good.
That's right. So if a listing agent's biggest item is certainty, borrower certainty, so they can communicate to their seller this is going to close. And if a buyer's biggest thing is I want to have certainty to make sure that nothing happens and the deal doesn't blow up at the very end, both sides want certainty.
Right.
The answer is get underwritten as soon as you can. Get us all the documentation. Yes, it's a little more work up front, but remember that analogy of a rocket ship leaving the Earth's atmosphere, it takes 80% of its fuel to get out of the atmosphere,
Yeah.
and 20% for the remainder of the trip.
Oh, that's a good
Let's
one.
use the 80% of our
Yeah.
energy up front to get through the underwriting approval so that you have clarity, you have certainty, the seller has certainty, and it's a smoother process. And then there's very few snakes in the grass, if any. And you're going to wake up in a couple weeks and say, wow, that was really easy. I heard so many horror stories about buying a home and out there in the marketplace, and gosh, that was so easy. Well, why was it easy? Because we did all the work up front. So important.
Yeah, and I can't. So stress is always really high during these housing transactions because there's so many moving parts, right? So as a borrower that's going to be buying on our end, we call them borrowers, but you're really the homeowner, right? So you're going to be moving, you're going to be providing all these documents to go through underwriting, you're going to be spending, money out of your own pocket, so you're finagling your finances to make sure everything is there that you need. There's a lot on that end of buying a home. What if this huge piece of all these underwriting document conditions are cleared so that you could spend that, month or 15 days just getting ready to move?
That's right. And
That's
I think,
amazing.
yeah, and so what is involved with the TBD underwrite?
Yeah.
Like what does it take? Well, number one, you've got to be working with a mortgage company that has the infrastructure to allow a TBD underwrite. Because a TBD underwrite, a pre-contract underwriting, means that it's using bandwidth, manpower, right?
Oh, yeah.
Woman power. Our underwriting team is or they're actually human beings reviewing these files. So if there's no contract, there's really no 100% guarantee that the loan's ever gonna that the borrower will ever get under contract and that this will be a closed loan.
Mm-hmm.
Once it's underwritten, of course, you find a property you're going to close on the loan. But we have clients that go through the TBD underwrite and decide I'm going to rent for a year. Or I just had one that moved from Austin to a different city. She thought she was going to buy
Right.
in Austin. She moved to a different state with her job. And so she's going to buy there, but she's not buying with us. So, I think that's the most important thing is you've got to know up front that going through this process is going to be a little more work up front. Okay. And when you do that, you come out of it with certainty and clarity. But know that it's okay if you decide to pivot and do something else. Or you go through new construction where the new construction lender is offering some incentives. That happens. Okay. We're a proponent of that. Our job is to help our clients get the best house, period.
Right.
The right house, the best house with the best terms. And that's what we're here to do. Our underwriting team knows that as well. They know that putting you through the TBD underwrite, now your loan's approved, gives you the best chance to win that contract. When you win the contract, you're going to close. And what is it going to feel like when you put your key in the door and open it up for the first time and you're a homeowner versus you didn't go through the TBD underwrite process? You don't have that certainty with the seller. You don't have that borrower certainty for yourself, and you're out there kind of spraying offers around and other buyers are beating you out because it's multiple offers, which we're already seeing right now. And our buyers that are not TBD underwritten are at a disadvantage.
Yeah. Yeah. It's starting to heat up a little bit in the market. As we're going into mid-spring, this is when it's usually a pretty big busy season.
It
So
is. Yeah.
a
This is
lot of
it.
people look to move, but I think that we've covered quite some good stuff.
We
Do
did.
you have any other final nuggets?
Well, I think this piece at all loan types, it works, right?
Mm-hmm.
So FHA loans, conventional loans, USDA, VA. We didn't touch on jumbo loans today. Specifically, we have a different process for TBD underwriting our jumbos. We do an
Mm-hmm.
income verification and a specific income calculation. That's how we do our TBD underwrite with the jumbo. So it's a little different process. We're just nailing down the income. What is your qualifying income? So self-employed borrowers, really critical for us to go through, especially our self-employed borrowers. Make sure we've got your tax returns. Let us do the analysis up front and get a qualifying income that we discuss also.
Mm-hmm.
We get back on the phone with you and say, okay, we've gone through an underwriting process. Here's the income that we're using to qualify you, and here's why. And that full transparency, I don't see it in the marketplace like it should be out there. I think our borrowers have a right to know what is the mortgage company using to
Absolutely.
qualify you.
Yeah.
And I don't think that full transparency on a macro scale is out there. And we provide that here because it's so important for you to know exactly what we're using to qualify you and why. And so that may require you to move to a different loan program. That may require you to move to a different sales price, purchase price category, right? Because we're finally presenting to you what exactly you're qualified for, and it's a true approval. So I hope that helps because I think it really will. It's the future of our industry.
It is.
It is already here for many companies. We feel like we've led the charge to some degree here at Benchmark, and excited to see the industry going in this direction because it will have a higher success rate, lead to a higher success rate overall, better experiences for buyers, better experiences for sellers, and then a lot more smiles at the closing table.
100%. It's way less stressful. It's way faster, and you get a much clearer picture of your situation.
And it doesn't cost you anything.
And it doesn't cost you
To do
anything.
it.
It sounds too good to be
Right?
true.
Why wouldn't everybody do this?
And so we're big proponents of that process of getting you underwritten before you go into contract. So I love that we spent time talking about it. I think it's a huge deal because we don't, it's hard pitching the desire for us on our end to get, somebody into that underwriting process. They're just excited to go house shopping. And I get that. But it's not but to get that house with assurances, we want you underwritten.
Mm-hmm.
So might as well start that process now. We're here for you.
That's right.
And
reach out if you have additional questions.
Yes, please like, subscribe, and share to the Lending Podcast. We thank you so much for watching.
Take care. See you soon.